The world bet everything on AI paying off, but so far it's the biggest capital misallocation in history, and the bill is coming due. We are currently witnessing a $3 trillion ghost story. It's a tale of massive data centers, endless rows of cooling fans, and millions of silicon chips humming in the dark, all waiting for a profit that may never arrive. For 2 years, the global economy has been fueled by a single, intoxicating narrative that artificial intelligence would redefine human productivity. Look beneath the hood, and you'll find a cavernous, trillion-dollar gap between expectation and reality. The scale of this gamble is difficult to fathom. Big tech has already committed over $1 trillion to AI infrastructure. We are talking about the largest build-out of physical hardware in the history of civilization. Microsoft, Google, and Meta are pouring tens of billions every quarter into high-end GPUs and sprawling data centers. They are building digital cathedrals. The problem: the actual revenue generated from these tools is currently a rounding error. It's a lopsided equation where the cost of the engine is 10 times the value of the cargo. Imagine a developer spending $1 billion on a luxury hotel in a city where no one has a car to get there. It is the AI trade today. This isn't just a tech problem, it's a systemic risk. The S&P 500, once a diversified basket of the American economy, has mutated into a single trade index. We are now living in a world where 30% of the market's entire value rests on the shoulders of just a few companies. If Nvidia stumbles, the pension funds of firefighters in Ohio and teachers in London feel the earthquake. We've turned the global financial system into a Jenga tower, and the bottom blocks are all made of silicon. We are betting the stability of our retirement accounts on the idea that a chatbot can eventually justify a $3 trillion valuation. The parallels to the dot-com bubble are no longer just whispers, they're screams. In 1999, the world was told the internet would change everything. It did, but not before 90% of the companies involved went to zero because they had no path to profitability. Today, we are facing the productivity paradox 2.0. Despite the hype, national productivity metrics haven't moved the needle. Companies are burning through their cash reserves on digital hallucinations and automated tools that often create more work than they solve. We've replaced human efficiency with expensive, energy-hungry loops of trial and error. The blind spot here is massive. The World Economic Forum recently updated its global risk landscape, and the results are chilling. AI-related adverse outcomes have skyrocketed from the 30th to the 5th highest long-term risk to global stability. This isn't just about jobs. It's about a liquidity trap. Retail investors and institutional pension funds are sleepwalking into a sector where the exit door is far too small for the crowd inside. When the market realizes that a GPU cluster is essentially empty real estate, if no one is paying to use it, the rush for the exit will be historic. Think about the fallout. If the valuation error escapes, the impact on semiconductor ETFs will be a bloodbath. Nvidia, the kingmaker of this era, sits on a throne of orders from other tech giants who are using debt to buy chips they don't yet know how to monetize. It's a circular economy of hype. If Microsoft or Alphabet scales back their capital expenditure by even 15%, the entire supply chain collapses. The wealth effect of the last 3 years, the trillions of dollars in paper gains that have propped up consumer spending, could vanish in a single fiscal quarter. We are staring at a $3 trillion mirage. The technology is impressive, yes, but the math is broken. We've built a high-speed rail system to a destination that hasn't been built yet. The valuation air is getting thin, and the oxygen of cheap debt is running out. When the music stops and the lights in those trillion-dollar data centers stay on, but the checks stop arriving, we will realize we didn't buy the future. We simply pre-ordered a crisis we couldn't afford. The bill is coming due, and the world isn't ready to pay.